What is going on, guys? It's your boy Tyler Katz coming back with the fourth episode of Mad Money. This last month has been crazy on the financial market. We have seen U.S. coronavirus deaths top any country in the earth, and the U.S. now officially has the most infections. And quite frankly, while this might seem like really optimistic or pessimistic things for the stock market, and the mood might be bad, the stock market last week actually did surprisingly well. We see that the index that tracks the S&P 500, ticker symbol SPY, went up an estimated 13% last week, 10% last week, 10 to 13%, depending on who you ask. That is a substantial amount of growth for a stock market and an economy that has 18 million Americans filing for unemployment, which is nearly 2.5% of all working class citizens, and a stock market that has seen the coronavirus lead to economic shutdowns. Worldwide or nationwide, only essential businesses are functioning. So, why is the stock market doing well? It's a good question. People think that the worst is behind us with the coronavirus. The biggest thing that people are pointing towards is Dr. Anthony Fauci, the leading infectious disease expert that constantly talks in the White House. He's been saying recently that the curve is flattened, and it looks as if the original estimate of 100,000 people dying has actually recently been reduced to only 60,000 people. So that optimism and the potential that the coronavirus epidemic will be done sooner rather than later has led investors to buy a lot of stocks. Some big risers this week were my own personal favorite, JP Morgan, which is a bank. They were very optimistic about the coronavirus ending, and they actually said they were going to increase employment because they need to distribute lots of loans, and they're understaffed to do that. And therefore, there was a lot of investment in that company, and a lot of other big indexes are saying that, the coronavirus epidemic, while it might be really bad right now, it's slowing down. The curve is going in the right direction. So, always, what's my advice right now? Honestly, I think I'm in a sell phase this week. I am sitting around $3,000 in assets right now, and I think I'm going to sell off some of those in more risky stocks. Obviously I'm going to lose a little bit of money considering I invested before the market went really bad because of coronavirus, but I think that it might get substantially worse after a lot of big companies that are on the S&P 500 and the New York Stock Exchange announce their earnings in the quarter, especially any non-essential business. Auto manufacturers are going up because of ventilator manufacturing as mandated by the Trump administration, but I'm trying to think of like a good example. Like I think Apple is probably going to be taking a pretty big hit. Apple did try and shift their manufacturing facilities to produce masks, which I think was interesting. It was a good PR move, and their stock rose up quite a bit. But I think the FANG stocks are going to be fine because they're in tech. But Apple specifically is going to be losing a lot of product sales. I think Facebook and Twitter and all the tech stocks are still going to be doing well because people are still using their phones and people are still going online. People are still using social media. I think the big movers. I think the banks are going to be doing pretty well recently, but I think biotech is probably going to take a hit. So my advice right now is probably to sell. I'm a little scared of the direction the market's going in, and I'm quite frankly not sure what the future holds. So, yeah, I'm kind of pessimistic in that note. But on the other note, it just kind of depends on what happens with the Trump administration and their response in the future. We'll see how it all turns out. But anyways, I'm ready to take a caller. Caller, do you have a question?
Yes. So, hey, Tyler, thanks for such an incredible month of Mad Money episodes. I've made myself thousands of dollars based on your advice. What would you suggest as my next move in the market?
Alrighty, thank you very much for the question, caller. The next move on the market, I gotta say, is I would do one of two things. If you're currently invested in stock positions like the S&P 500 index or the VOO index that tracks the Vanguard Mutual Fund, I would take out that money in the stock market right now. I think last week was a good week for the market, but quite frankly, I see that it's not going to improve in the following weeks. The unemployment forecast is looking bad. Coronavirus cases are still climbing. And I think, quite frankly, I would not be happy. I would not suspect the market to be bullish next week. If you want to bet against the market and get a little more risky, you can trade stock options. And for all my viewers who have been listening, you obviously know what a stock option is. But the stock option is essentially a bet for or against the market, and you buy a contract to purchase shares at a certain expiration date at a certain time. So I would buy puts, which is the opposite of call, so you're betting against the market, and I'd buy puts on the big moving stocks, like a lot of indexes. I think I'd buy puts on a lot of ETFs because I do think the market will generally go down, and that's my prediction for this week. Thank you very much, caller, and thank you for another episode of Mad Money. My name is Tyler Katz. I'm signing out.